What's up, everybody? Welcome to another episode of Fraud Boxer. Today, I got a special one. I have the Chief of Staff of Chargeflow, Ben Geroot here. How are you doing? How did I do, by the way? How did I do?
It was pretty good, to be honest. The head is something which is kind of difficult for non-Hebrew or Dutch speaking, so it was good. Thank you for having me.
Yeah. So how is your day so far today? Well, evening for you, right? Because you're over there.
So actually, I had a couple of quite intense days, but that's my last session, and I was really excited to be here for this session. So pretty good.
Yeah. Well, let's get on with it so we can get you back and on with your evening over there. So tell me a little bit about who you are, how you got into fraud, and let's just get rocking.
Right. So I'm just a simple guy, right, that started as an electronics engineer, but then back in 2016. So my wife and I were on our honeymoon in Mexico, and she was scrolling through Instagram and she saw one of her friends actually relocating to London. And my wife told me, you know what, let's move. Let's relocate. It looks like a good idea. I said, fine. As a kid, I used to live in Paris for about 6 years. So I said, why not go ahead? So I ended up finding a job with a company nowadays called Payable. Back in the day, it was called something else. But I started as a risk analyst for an acquired bank. And this is how I started in, history since then.
So what did you do kind of at Payable? Okay, first of all, let's actually back up a little.
Yeah.
Because now I got to know. So you just were like, I'm going to move and just went?
Yeah. Yeah.
Just off of an Instagram thing from while you were in Mexico?
Yeah, absolutely. I mean, we had no kids at the time, so we were free to do whatever we wanted. And it's a good opportunity. I like Europe. I like to live abroad. I like to experience new cultures. So yeah, why not?
So it's not on our notes or anything like that, but I have tended in my life to move a lot, but not to other countries and places like that, but usually up and down the West Coast. But I didn't come from money. So it was a struggle sometimes, but I would do that or be like, I think I'm going to move to LA, and then I would just go. Or I think I'm going to move to the Bay Area, and then I would just go. And I'd figure it out. Now, I have that type of personality that I know I can figure it out when I get there. So I kind of just roll the dice. Now, I usually had a pretty good support system. Like when I moved to the Bay Area, I had Eamon Murphy living up there who he let me crash at his place for a while and all that. But sometimes you just got to go. And for me personally, it's always just worked out, and it's led to some really just cool experiences, just learning new things, meeting people. Like my life's completely different because I just get in the car and go sometimes,
Absolutely. To me, I think it was the first time that I really had to, whenever I got into a certain challenge, there was no one to solve it for me. So I had to, be head on into the issue, and just it's a muscle at the end of the day. Right? Mm-hmm. You get used to solve your own issues. Yeah. And it's good for life. And as I'm entering my middle age, I didn't realize in my younger years how when I just have to grind to get things done, and it's just what I do. I just always am got to do this, what's next? How much that has benefited me to get to where I am. Absolutely.
And then how my life now is framed like that, and why even with this show and having my day job, and then I started another new show with local businesses and stuff, and it's just what's next, and not everything works out, but a lot of it works out better than I would have ever expected, because I just have that type of personality that's just, I always want to be building and be growing as a person and learning. Right now I'm doing a whole bunch of stuff with my left hand, just to try and learn more, and it's just little things switching the TV channel with the remote there. That's a little thing. And then typing more with it, moving things around, grabbing things with it. And it's been fun to it's a little thing, but
no, I've actually something similar. So back in the days, I used to drive a manual car, right? Yeah. And what I used to do once in a while is to shift the gears with my left hand.
Yeah, reach across and...
Yeah, which doesn't make any sense, but something told me that, why not? And everything is fine, no crashes, so all good.
Yeah, and then I guess when you live in London too, you kind of need it if you have a manual car. But it's hard to find a manual car these days. It's hard. It's starting to be an upcharge to get a manual even.
Yeah, absolutely.
So we could talk about this all day long because that seems like the type of people we are, but we are here for a little bit more. So kind of talk about what you did when you were at Payable and what got you to where you are with Chargeflow, because you uncovered these things that led up to where you are and needing to solve that. And then we're going to talk specifically about compelling evidence 3.0 today, people.
Yeah,
So,
sounds good. So technically I did everything, right? I used to do underwriting. I did risk portfolio, risk rules, chargebacks, KYC, KYB, the whole shebang. So I was lucky enough to touch on all different bases. So it gave me like a good base for my next role.
And what was your next role?
So I actually moved to, it was in Frankfurt, my first role. And then I moved to Berlin to an online bank or neobank called N26. And there I was lucky enough to manage at the beginning one team of card dispute analysts. And then I acquired a different team of card fraud prevention. So my work with when I acquired was really helpful for me to switch on to the other side, the dark side, or the issuer side, however you want to phrase it. I don't know who's on the dark side, right? But I could really understand the logic of what happens on the, the flip side of the coin.
So let's talk about a little bit of this thing that came out a couple of years ago.
Yeah.
This is called, we had compelling evidence first.
Yep.
I like to call it 1.0. We kind of skipped 2.0 and we went straight to 3.0.
Yeah.
And, I don't have a whole lot of compelling evidence 3.0 content. And over the last few years that we have been living in this compelling evidence 3.0 world, there's been some changes. So with Chargeflow, you guys have a pretty good understanding of what it is. So why don't you rip me through a little bit of what compelling evidence 3.0 is, level set, and then let's talk a little bit about some of the updates that have happened and some of the evolution of that, if we could.
Sounds good. So the original part was that you are able to present evidence that three transactions that were performed before the disputed transaction with similar characteristics like IP, address, device ID, and so on. These were not disputed. And this means that why now this dispute is being made? Why is it fraud if the previous two transactions were not disputed? So it doesn't make any sense. So this was like the logic of the compelling evidence set by Visa, and was specific for Visa 3.4. So this is the original one.
Yeah, the original one. And I remember on that, the thing that was unique about that one is it pretty much was spanned all time. There wasn't like a time frame, which they put in the new one, and we'll talk about that. But I remember compelling evidence, when they first launched it, I did a panel. We're coming up on 8 years ago even. And some merchants had a lot of success with it. And they were seeing increased wins. At the time, I was at the world's largest ticketing company, and we were seeing the opposite of it. We tended to be losing cases more when trying to submit compelling evidence data. So we actually went in and changed some of our templates and put the word compelling evidence right across the top in giant letters, so that whoever on the issuing side was reading these packets would see that first and get it in their mindset. And that helped a little bit. But I think like some of the challenges was like there was just kind of all over the place on what information qualified, like, because it was like IP, it was email, and it was issuing, it was credit card at the same time, and then previous undisputed transactions. And then they started introducing this device ID thing, and that kind of threw people for a little bit of a loop there. So let's keep going on that. Keep going. Just I'll let you. I don't want to steal any of your thunder or pull anything out for that you got planned for later.
No plans. The kids are asleep already, so no plans. So that's good. But yeah, I mean, as you mentioned, there was no IP address, there was device ID or fingerprint, shipping address, and customer or account login or user ID, all of these. So the idea was, as you mentioned in the beginning, there was no real time frame, but then they evolved into having, now we do have a time frame. We want it to be rather recent, so 120 days to 365 days. This was a second change, so to speak. But I think the most interesting is going to be, unless you want to stay on this topic, is going to be the evolution, but up to you.
Yeah. So I definitely want to get to that. Now, me as a merchant, and you don't have any say in this, don't worry. So I'm not saying, but I'm going to say some of my grievances that I have with that 120 days to 365 days is if you're in a merchant where it's not common to buy things like
Yeah.
once a year always,
Yeah.
it could be frustrating. So like I want to say like when I worked at Ticketmaster, for example, the average consumer bought 1.3 times a year.
Yeah.
So it still is inside that, but there are people that only like their favorite artist only goes on tour every couple of years. So they're not buying that often. And then things change. And since tickets typically don't allow refunds or exchanges or things like that, you can resell them. You would see these chargebacks come in that we know it's the right person, but it's now outside of the 365, but we know it's still them.
Yeah.
Everything else matches. It's just a timeline. So for me, as a merchant, and this is the opinion of Jordan only, the time limit is the limit at the end is frustrating. Now I understand the 120 days because if they get ripped real fast, like I get that, I totally get that. It needs to be an older, mature transaction.
Yeah.
But I do think that no matter the length of the time on the maturity of that transaction should still qualify. But that's my opinion. And I will keep telling Visa that until they maybe decide to change.
No, I mean, absolutely. Think about luxury goods. How many times a year you're going to buy Louis Vuitton stuff, right?
That excellent point.
Plenty.
Great point. Yeah.
So
I would
luxury
3D secure
goods,
everything
and
there.
I think that the original idea was mostly for subscription related payments, because then you do have mostly a monthly recurring payment, so you can actually utilize it. The issue is that with these kind of transactions, you're lacking some of the data points. So it's like a mix and match of these. I mean, sorry, go ahead.
And that's fair because I think the subscription one, absolutely, because my mind went to like the 365 is like perfect for, last year we billed them at the same time, or they started the subscription at the same time. That one I totally get. However, like, I just feel, I get where you're coming from, but the luxury goods one is excellent. And I just say, like, for me, I would just 3D secure all the things. If someone's buying a $5,000 Louis handbag clutch from me or a $100,000 suitcase, you're getting 3D secured.
Yeah, but then you get to a different issue because not all issuers, roll along with the 3D secure. So
good point, too. See, this is why it's good to have you here and to keep me honest on things.
No, I mean, it's really good. Obviously, the 3D secure introduces a layer of extra tension, right? It somewhat hurts the conversion.
Yeah.
But at the end of the day, this is what you need as a consumer to make sure that you actually have a valid purchase, and as a merchant, you are secured in this sense that nobody's gonna at least fraud dispute.
Yeah.
But then they bypass it by doing service dispute. So
And that's the thing. Like we saw that in COVID a lot, especially on 3D secure transactions. And now I think with VAMP, it's going to get a little weird because the TC40 data now actually counts against the merchant, which sucks. But even if you 3D secure, you're still punished. But to your point, if basically we saw that during COVID, people would tap on the app, and if they couldn't get their dispute to open one way, they just start back over and try a different way and say, I never got it. And then then we lose some of the compelling evidence 3.0, like protections, if you will.
Absolutely.
So, So back on track, let's talk about the evolution. You tell me about the evolution of 3.0, if you could. Jordan jumping in here real quick to talk about today's sponsor. Remember when we used to use IP for just about everything? That's kind of how we figured out where people were. Then VPNs came along and kind of screwed that whole thing up for us. Of course, on mobile, it's a different story. On mobile, fraud teams have GPS coordinates, Wi-Fi signals, cell network data, multiple signals painting a clear picture of where the device actually is. But on web, we get an IP address. And as we all learned, IP address can be masked, reassigned, or even shared by thousands of users at once. So a login from an unexpected region looks identical to a normal one. Geographic compliance checks are basically a best guess. Incognia's verified IP location changes that. Incognia has a global network of mobile devices, real devices in real locations. Those devices are constantly connecting to the internet, and Incognia sees exactly which IPs they're on. So when that same IP shows up in a web session, Incognia already knows where it's coming from. Not from a database, from actually seeing it in the real world. What does that mean? That means fraud teams finally have a web location signal worth acting on. Scan the QR code below to learn more about Incognia's verified IP location. Now let's get back to the episode.
So they introduced quite recently, I think it was like end of January, I believe. And they introduced...
It's January 26th, if I'm not mistaken. I'm trying to bring out my PDF over here.
Either 26th or 29th, I'm not sure, but end of January, that's for sure.
29th, you were right. 29th, you were correct on that one.
So they introduced like 3 new points that now extend the validity of what could count into it. One of them, the first one is the same merchant only. So now cross merchant with the same acquirer. So, and this applies mostly to acquirers, because obviously if you're a merchant, you're not going to get, same transaction or same characteristics with a different merchant. You're not exposed to this data. So this mostly for acquirers. So now they can see, okay, I've got this payment with one merchant, and now the same cardholder or the same account, same IP, anything, they are interacting with a different merchant.
But the same acquirer, everybody, I just want to drive that point home. It has to be the same acquirer. Now, thankfully, most of us use the same few acquirers. But it does suck if, like, I'm using, let's say, an Adyen and somebody else is using Stripe, and then they're ripping us both, because then I'm not going to get that protection.
Yeah, absolutely. And I think, to be honest, most of the bigger merchants, I'd say, are using more than one PSP or more than one acquirer, just to diversify their risk portfolio and so on. So yeah.
So this is really cool, this new thing where we can actually do cross acquirer. But me as a merchant, I'm not going to have that insight myself to fight that, because I'm just not going to know that, like, merchant number 2 over here is on Adyen or Stripe or Checkout or even JP Morgan. So is there a tool that they're offering to do this? I'm sure there is. I'm sure they want to upsell something to me.
Absolutely.
So,
I mean, something which is really nice with Visa is that for every problem that they create, they have a solution for it, but you just need to pay for it, right?
Of course.
It's not dissing.
Monthly recurring revenue.
Yeah, I'm not dissing anyone. It's a good business idea. So, I mean, they do have the order insights tool. And how it works is when an issuer or a cardholder, initiates inequally, the order insight responds in real time. And then the required CE 3.0, with the data elements, they are presenting the data back to the issuer. So this is how they actually combat these kind of items. So they do it for you on your behalf.
So it is a complete deflection then. It is an actual order insight deflection. So actually, me as a merchant, if it qualifies for this cross merchant or cross acquirer thing, I technically wouldn't even see it then.
Mm-hmm.
Okay.
I mean, you might see it when you're on your portal, or inside portal, but it's going to be auto defendable.
Okay, that's helpful. Yeah. That's helpful on that, because like that was always my big questions when they put this out in January. And they're kind of weird about that this new functionality even exists. I asked a couple of people at Visa, they're like, you're not supposed to know about that. And I'm like, well, they put literally a bulletin out on January 29th, as we have figured out. But they're kind of like not advertising that this new functionality exists. And any idea why? I mean, it seems like a great idea to upsell order insight, right?
My only guess that the VAMP surge or the hype is not done yet, because it's just evolving, and maybe they do not want to currently introduce a new thing into the market, at least announce it out loud. So this could be a potential reason.
That makes sense, because the new VAMP, like new lower threshold for merchants is live now. But I mean, it's still like it's 150 basis points. It's still a pretty strong thing. But I mean, there is the double counting, so you have to think about that. But it's still strong. Like it's still a pretty strong number. So
it is. But think about the fact that VAMP is for acquirers, right? It's Visa acquiring monitoring program, which means that regardless of the merchant thresholds, the acquirer is going to have lower thresholds, like 0.5 or something.
Yeah, I think they're moving down to 30 basis points. Are they moving to 30 on for April? Or is it?
Yeah. Absolutely. So what it means is that any merchant that crosses the 30 basis point is actually negatively impacting the acquirer's risk portfolio.
Yeah. And so, what we're starting to see is, and I don't want to say names or anything like that, but we're starting to see, and I don't want to say exactly what they're doing, but we're starting to see the acquirers offer different pricing based on your risk profile to offset, to try and encourage and lure lower risk merchants into the fold of their portfolio to offset even those medium, which used to be low risk merchants, and their higher risk merchants. Yeah, so 50s where now the acquirers are going to start to see $4 fines, and then 70 is going to see the $8 fine, because that's the excessive. Now that's acquirer fees, and then as we know, just like with Visa, acquirers also would like to mark up some things. So those fees, those 4 and 8, is probably not going to be what the merchant is going to pay at the end of the day. And there's all sorts of fees for timing on disputes and those sorts of things too. So acquirers are going to be swimming in the money, while Visa's also going to be swimming in the money. So, so use services, everybody.
So everybody wins apart from the merchants, right?
Yeah, except apart from merchants, exactly. But there was after the interchange situation that happened over the last couple of years, a couple of legal battles in a couple of different regions back and forth. There needed to be a way to stick it back to the merchants for raising those questions, and I believe that they found it. Also, adding new other fees and elsewhere. Yeah, interchange might be capped, but nothing else is.
Actually, I just remember something. Back then, working for Paradal, what we used to do is we used to have lottery merchants. And the reason for that is they had millions and millions of very small ticket purchases, right? So even if they had 1,000 chargebacks, still the ratio was so low that they offset the whole risk portfolio of they acquire.
Yeah, so you want to have those. So it was low risk then in Lotto, which usually you think of like any sort of I don't always necessarily categorize Lotto as gambling, just because there's not really you can't increase your odds in any way, but I guess you could buy more tickets. But for some reason, I always segment out Lotto from the rest of iGaming, which could be high risk because when people lose there, they tend to charge back.
Definitely.
But I mean, you're starting to see that though, you're starting to see enticements from other acquirers for lower risk merchants to come over and offset those, which I bet you we'll start to see people splitting traffic too, to try and take advantage of multiple sets of that, which is a really weird way. And, it used to be when I started in fraud and payments many moons ago, more than 15 years ago, if you had more than one acquirer, it was kind of a taboo thing to do because you were probably trying to game the system in some way.
Yeah.
And then, now it's become more of that's a strategy that's just normal. You get higher approval rates in these regions using this one. You get better pricing using this. You get more payment methods, which, is more the norm now. And it's really, that's where you see orchestration come in. It's just really, really interesting to see the Visa in this instance is going to make a whole new thing happen, which probably wasn't their design, but it's going to cost merchants. At the end of the day, it costs merchants.
Yeah, but think about the fact that, for example, nowadays merchants distinguish or split descriptors in order to have separate ratios. So they utilize the different requirements for, the VAMP or even for MasterCard programs. They utilize the actual requirements of how the ratio is counted, and then they are sort of reverse engineering it to reduce the pressure. So you can have different descriptors, you can have different mids, you can have, it depends who is measuring what.
So the mids thing is the thing that I think I see the most common is people they split their higher risk regions into, they spin them off into different mids. So there could be different fees over there. And then you can segment off that piece of traffic to a different acquirer that could maybe offset your portfolio with some of their lower risk acquirers. But, a lot of companies, especially international companies, are splitting. They'll have 5, 6, 7 different mids based on regions or based on currencies in order to say, okay, this is my VAMP ratio in this region, this is my VAMP ratio in this region here. That way, your bigger markets, which for a lot of companies is the US, won't be in trouble. That if your emerging markets like your Middle East or even your APAC starts to see a little more, it used to be we talked about a little bit earlier. You try to throw some 3D accurate things to do that. I sometimes do that myself in regions that are hotspots, but I force friction. And I do that on purpose to try and discourage behavior. It's not so much as trying to kill a conversion. I know you mentioned that a little earlier. Certain products in certain regions, you can pop friction because they will go through, ticketing is a great example. Them almost always will go through a legitimate customer will almost always go through a friction in order to get their tickets because you can only buy it there. Same thing with Louis Vuittons. You probably will see more solved friction and less abandonment just because the products are scarce. But if you're trying to buy different resale markets, vitamins, grocery, digital goods, you're probably gonna see more card abandonment, doing all sorts of things. So Compelling Evidence 3.0, both the original version with the 120 days, 365, the 3 elements, which is the IP, the device ID, and I believe it's the same credit card, right? And email. So there's 4 things, right? Am I keeping me honest on that?
That's user ID, that's the device ID or card fingerprint, and shipping address.
Okay, shipping address. So those things can be hard to manage. So tell me a little bit about how you guys could help me do that.
So what we do with Chargeflow is we provide products to reduce financial loss due to the, handling of credit cards or debit cards. So what we do is we serve a lot of merchants. When I say a lot, is thousands and thousands of merchants, and all of this data is sitting in our databases. And what we've seen oftentimes is that a certain, I call it ATO, right? Because it's not necessarily going to be the same email or the same card, but it's going to be something which is similar enough to create an entity that you could use in order to match transactions on different merchants. Because we've seen customers making purchases on different merchants that we manage. So this is a good way to have a broader view of what's going on in the industry, especially if you're talking about e-commerce and so on. You would see it quite often that you see the same card in different merchants. So this is what we do. We utilize the data that we have, and we are able to create a more compelling representatives based of this data. So this is what we do. And obviously, as part of our role, we have to be up to date with all the changes. Whereas merchant that would like to do it in-house, it's possible. All the information is online. Anybody can do it, especially nowadays with the AI. Yeah. You can create your own Claude thingy agent to do it for you. But at the end of the day, if you're not working on it, you're probably going to have lesser results. That's the reality.
Yeah, actually know a major retailer that was told to AI their chargebacks, and they're like, "What?" They're like, it sounds so easy just to say that.
Yeah,
but this is I'm always a big fan of you got to know what you're good at. So a e-commerce business shouldn't be trying to be a chargeback company.
Absolutely.
Also shouldn't try to be a fraud company. I'm a big fan of buy versus build.
Absolutely.
For big things, and if you want to try to make a checkout, that's one thing, but for big things, it's
and take it to the professionals, right? If you need to go to court, would you rather have a certified lawyer that actually knows the rules, or would you like to represent yourself?
But what if I could build a lawyer in-house using Claude?
Sure, go ahead. The question is how often.
You're going to jail.
And the question is how often you're going to maintain it, how well informed it's going to be, how do you actually connect it to all your different sources? Is it connected to Zendesk? Is it connected to Recurly? Is it connected to your database? There's a bit more information involved in it. Plus, don't forget about hallucinations. You need to be able to control it.
Yeah. So I was messing around. I wasn't using Claude. I did use Claude the other night, and I got frustrated with it because I ran out of tokens, even though I paid $200 a year for the thing in 2 seconds. 15 minutes, actually, was the exact amount of time it ran out of tokens. But I was watching a really shitty TV show called Marshalls here.
Okay.
It's a spinoff of Yellowstone.
Okay.
And the main guy just keeps whacking people. He just keeps shooting everybody, right? And I'm like, I think as a U.S. Marshal, you could really just every episode kill a bunch of people. So I asked my Gemini, how many people has this man killed through the 9-episode run that has been released so far? And it said 3. And I was like, well, first of all, I just counted more than 3 in this episode. So I said, are you sure about that? Because I just saw more than that. And it's like, oh, you're right. I was counting main characters only. And then it starts listing more. And then I was like, I guarantee you there's more than that. And it took 3 different times asking it before I got what I felt was a fairly accurate. And it was so confident that he'd only killed 3 people.
So this is one of the issues with specifically, I think, ChatGPT and Gemini. They want to make you happy.
So that I was watching that on the news too. Is it is the self-validation. Is it always? It's trying to talk to you in this positive thing, and it's like.
So you do have. Sorry,
go ahead. No, go ahead.
You do have ways to go around it, right? You could make sure that the prompt knows that you want it to be objective and you want it to challenge you, right? But at the end of the day, the essence of it is just to mostly make you happy and continue to use it.
Yeah, I have seen people saying like, what is it? Prioritize accuracy over whatever.
Yeah.
Like, and like that shouldn't have to be said. It should always be prioritizing accuracy of the information that's asked of it.
Yeah,
So,
I think this is the nuances between the different agents providers. I think when you have GPT and Claude, and then you have the Notebook LLM and so on, each one of them is slightly better at certain tasks. And probably you've got many on YouTube manuals on how to use or what to use when, depending on the work that you want to do.
so let's, I guess, get back to it. So tell me why, give me some exact examples. Like you have some pretty good numbers here, some actual data about how you guys basically, why I would be more successful hiring you guys over using Claude to make me something that'll hallucinate a representment packet.
Well, actually, the MRC just released the 2025 or 6 report yesterday. And in that report, it said that like the base level of win rate is about 26% or something like this, or 28. I can find the exact number. And this is way below what we achieve, way below. And think about the fact that each additional percent that you win is money that you get to keep. And this is net money, right? That you get to keep and get back. And again, if you have a higher win rate, you're going to have higher recovery rates mostly. And then you're going to get to keep more money, which is...
So one of the things I think that people do tend to overlook is like they look at their base chargeback rate and then like how much money has got out.
Yeah.
They forget that the product is also gone too. And if you're a digital goods merchant, that's easy to reconcile. Doesn't matter. You're out nothing except for maybe some development time 10 years ago. Okay. But for shipped goods, like you're out the money and you're out the product. So when you recover that revenue, you're actually recovering what the covery, like the cover, the nut of what that product was. But if you don't, if you just say screw it and you're leaving it, like that's a double loss. Like that is a double loss to you.
Absolutely.
And I think people do need to really remember that because like us, people that do chargebacks, that do fraud all day long, we're so close to that one single number. We don't ever look at like the cost of the actual goods too. So double your number, everybody, essentially.
It's actually more than that because you obviously lose the product, you lose the money, and you lose time, right? And operational burden that you have on. And funny enough, we do have an interesting product that is directly related to physical goods. So what this product does is it kicks in after the payment was done, so post-payment, not pre-payment, but before the shipment or the order was fulfilled. And then it gives you some sort of a risk mechanism with explainability to understand what are the odds that this payment is going to end up badly. And end up badly is not necessarily fraud or chargeback. It could be bad review, it could be return abuse or anything like that. So I think this is a very good product for specifically physical goods merchants. They are able to opt in and say, you know what, I got a very bad score. And the reason is because we saw this card number associated with something bad in a different place in our network.
So you're returning real-time intelligence to merchants too?
Yes, exactly. And then you are able as a merchant to say, you know what, I'm going to cancel the order. So I did not make the sale, but as you mentioned, I did not lose the product, the money, shipping, and so on.
That's always been a hard thing for me as in my position is, especially to senior leadership, reconcile that the orders that I'm canceling are not lost revenue. They weren't an opportunity anyway. Yes. It was actually, I'm saving, it's basically theft. Yeah. Because so many times, especially e-commerce and especially hyper growth merchants look at cancels as a loss and an opportunity. And they just say, basically, how can we get that to zero? And like, you're going to have to cancel some orders. That's just the reality of buying stuff. Absolutely. People walk in your store all the time and walk out of your store without buying stuff all the time. Like it happens online too. And it's easier if I can prove it. You know what I mean? And I feel like if I had like something like you guys where you're saying like, I've seen this guy charge back at every other store he's bought at in the last week. He's going to do it to you too. Yeah, that could be useful for that.
So at least you know that it wasn't for nothing that you canceled the order. So it's mostly psychological that you know that you made the right decision and you didn't lose any type of sales on it.
So how do you guys do it? What's the magic? What's the sauce?
Sauce, data is currency. Data is power.
It is actually.
Right?
It really is.
We have a lot of it. So we utilize it, right? We aggregate all the data. We've built an in-house model that runs through all the different parameters. We created features based on the data. And these features are used in our internal model to provide with a risk scoring. So this is how there's no magic. It's just data.
So you're not even calling it AI?
Actually, we're not using AI on this specific product. We're actually using a real, data science model and machine learning to create it's better for this type of activities specifically.
Yeah. So I just thought you guys were a chargeback company. I'm not going to lie. I didn't know you guys had this technology. So this has been super helpful for me to understand that, like, you guys have your own basically deflection product, even though it's pre-shipment.
Yep.
So how do we get a hold of you guys? Tell me where people should go. Tell me some things that people should know. And then we're going to wrap up with your predictions for the future.
Okay. So
yeah,
it's easy enough to find us on Google. Just click chargeflow.io. You can find our website. It's kind of
I'll put a QR code on the screen right now too, everybody.
Sounds good. Obviously, you can reach out on LinkedIn as well. You have my name, you have my email. So feel free to reach out. What I think in regards to the future, I just had a webinar yesterday about agentic commerce. And this is what we see now going on. And obviously, it's not there yet, right? It's like in the testing phase. Visa and MasterCard are doing tests with selected partners.
You see Amex's announcement?
Yes, I did.
Yeah,
I did.
Did you see the people have asked them for clarification on essentially they're making their own protocol. But they keep saying cardholder, or card member.
Yeah.
Which they keep ignoring when people ask them about merchants' responsibility in this, which means merchants are still going to be responsible. They're not owning it. Card members and the people that I see in the comments on like LinkedIn and on like any of like the comments on the news articles are saying how great this is.
Yeah.
That, Amex has their back, but people don't realize that Amex doesn't pay for it. They pass that on to the merchants.
Yeah.
And we are going to still be liable. You could tell how they're deflecting for these. So
definitely.
Agentic commerce is still coming. MasterCard and Visa are still trying to work through their things. MasterCard said that they're stripping out 3D Secure for now on Agentic. So merchants still going to be on the bag for that. It's at the end of the day, it's going to be on merchants to defend themselves against Agentic and how they want to do the approach. I think that it's good intent customers right now, and that I would take them as long as like you get positive signals in some capacity. Personally.
Yeah, absolutely. And at the end of the day, you just make it easier for the cardholder to purchase stuff. We become lazy as we grow up. That's a fact.
Me too.
And somehow the merchants are always the one to pay for it, right? Mm-hmm. We saw it back then with the BNPL. It was quite similar, right? There was a BNPL provider somewhere in the middle. The issuer did not take responsibility or liability. Mm-hmm. Obviously, the card network did not do it as well. The BNPL provider is just, it's a service for the PSP to use. And the PSP obviously the PSP or the merchant wants to provide additional means of payment and actually allowing people that do not have enough money to buy something that they want. And yet again, most of the liability is set with the merchants.
Yep. They would try to push back. I remember like when BNPLs were first emerging, like obviously they were playing with house money. They were throwing money around like crazy, but they would put super crazy rules around like when and how they would pay. It was like trying to buy and redeem a warranty on a product that you've purchased, like an electronic. Is like there's more ways that they're not going to hold the bag than there are that they're going to hold the bag. And I think when more people became aware of it, a lot of the BNPL offerings started to change. But,
absolutely. So
right, give me two more. Give me two more.
Two more
predictions.
Yeah. Wow. Yeah. Okay. Well, obviously we see
flying cars.
Sorry?
Flying cars.
So obviously we see that friendly fraud is on a rise. Yeah, we see it everywhere. And people are actually using chargebacks as a means of getting more money for themselves. So the whole idea of chargebacks was to protect the cardholder, but now it's been sort of like abused by it's not always the matter, right? Sometimes people genuinely forgot the payment or did not recognize the statement or something.
Yeah.
But
That's your
generally,
descriptor problem, which you talked about just a little bit ago. Yep.
absolutely. But sometimes you could see, anytime that you see a surge of chargebacks, you could correlate it to a financial event in a person's life, right? If it's a marriage or divorce or loan for student loan or something, you can connect it somehow to people having financial difficulties and how they see it. And it's just super easy nowadays. You just go to your banking app and just click dispute.
Yep.
Right? And that's it. Back in the days, we need to download a PDF. We need to print it. We need to manually fill it out with our hands and then do either fax it or submit it by email. But nowadays, you just click. That's it.
It used to be a real affidavit that you had to do.
Yeah.
Oh, it's like, it's all... Yeah, we saw that in COVID when people started losing their jobs and getting like furloughed and stuff. Like,
exactly.
Not only I worked at Ticketmaster at the time, so obviously we're gonna see because shows were canceled, postponed. Yeah. But other e-commerce merchants were seeing it. To your point, is like people bought something expensive. 2 weeks ago they had a job.
Yeah.
Now they all of a sudden don't, and that $2,000 on that purse would look real good back in their bank account. So let's open a dispute. And then they figured out that they could, and how easy that process was. And they just ripped it all the time. So,
and I saw it already in 2019 when I worked for an issuer, right? I saw my customers, my cardholders applying for a chargeback. And when I smelled something funny, especially if it was fraud related, I asked them to provide police report. And you know how many of them just canceled the chargeback immediately?
Yeah.
So it was a good way to, weed out keep
people honest for a change.
Exactly.
Yeah, maybe we should go back to that. Maybe we should go back to that time in our lives because it's too easy to scam merchants, and people keep wondering why their businesses keep going under. This is a big thing that happens. It's like $800 billion in false chargebacks or something, and refund abuse combined in the last couple of years, of just good customers acting bad. Well, that was super helpful. So in closing, what are some last things that we should know about you, about Chargeflow, about life, about happiness, all the things? Just let her rip.
Wow. So money is not happiness, but it certainly helps. And I think
it leads to less stress, which leads to happiness.
Absolutely. Well, to be honest, when talking about Chargeflow, obviously I work for Chargeflow, but at the end of the day, when looking at the ecosystem, we do use the top tier technology to do what we do. So this is a real differentiator. And I think it's important for people to know. And that's it, I guess.
Well, that's helpful. I will put links to Chargeflow in the description of this. Also, another QR code will be on the screen right now. It's right there, everybody. So please go visit them, ask questions, it's a really weird time in the chargeback space. And there's a lot of people making a lot of bold claims. I think it's really important to try things out and make sure you have the right solution for your business. And leveraging technology, and for one company to not be saying, we have AI, it's really telling you that they actually care about what they're doing and they're actually building something for real. So thank you for that. So everybody, thank you, Ben, for your time.
Thank you so much. It was a pleasure.
Yeah. We'll do another one in person one time once you're stateside again, and we'll just riff for a little while. Plus, we could show each other that we actually have sleep tattoos, which is nice for someone to actually.
This is still missing.
You got work to do there.
Yeah.
You got work to do. But it's nice to have somebody else on the show that actually has that because I've been alone for so long. All right, everybody. We'll see y'all in a couple of weeks. Thanks for watching the episode. Earlier, we talked about why IP location on the web has always been a weak signal. Here's the deal. If your platform is using IP to make any fraud decisions on web sessions, whether that be logins, transactions, onboarding, this is directly relevant to you. The signal you're relying on has real limitations, and now there's a better option. If you're dealing with ATOs, fraudsters hiding behind VPNs, or users accessing your platform in regions where compliance doesn't allow it, this could genuinely change what's possible for your team. Incognia built a better way to take the same IP address and turn it into something you can confidently act on, built from real device behavior, not database records. So if any of that sounds familiar to you, what's stopping you from learning more? Scan the QR code on the screen below to find out more about Incognia's verified IP location. Thanks again for watching. We'll see you soon.